Did you think getting business funding was going to be easy? Well, 5 years ago when I got out of the Marine Corps, I did. I saw approvals that came easy, and then I saw denials that made no sense. I watched people with perfect credit in the 800s get denied, and people with messy reports in the low 700s walk away with six figures in funding. And if I could go back, I would have done these things differently and a lot smarter to speed up results. So to help make your funding journey 10 times easier, here are 40 brutal truths about getting business credit and funding I wish I'd known a lot sooner. And let me tell you something. I sprinkled in one really high-level golden nugget that I don't even share with our highest level clients. So be sure to watch this video to the end. I promise you it'll be worth it. If you're new to the channel, my name is Colin Matthew, and I personally use these exact lessons to help over 2,000 entrepreneurs access more than $90 million in business credit and funding. I've seen too many people screw up their credit and funding opportunities. I run an 8-figure credit repair and funding company, and the truth is, I would rather teach you how to do it right the first time than have to fix your mess later. So listen, guys, certain moves get you funded and certain mistakes get you shut down instantly. So let's start with lesson one, and that's going to be structure funding to serve you, not to strangle you. I had a client named James over in Wisconsin. He came to me with what he thought was a win. He got approved for $50K. Problem was, it was a merchant cash advance, and the fine print was brutal. He had $600 daily payments, daily, right? That's $18,000 a month bleeding from his business. So I introduced him to my business relationship manager at PNC Bank, who secured him a $75,000 no-doc business line of credit and $25,000 0% card. His payments went from $600 a day to $600 per month. We saved him with that one single change, $17,400 per month in cash flow, and gave him the breathing room he needed to grow. So the lesson here is simple. The repayment structure matters as much as the loan amount. If your funding terms are trash and draining your cash flow, you're financing your own failure. Also, guys, just as of a week ago, we secured a new lending product, a $250,000 no-doc business line of credit in 6 popular states. So if you want to work with my team one-on-one to secure no-doc BLOC, the link is in the description and the pinned comment. Also, be sure to watch to the end, as of one of the lessons from 30 to 40 has that golden nugget I told you about that's going to help you access no-doc BLOCs. All right, so my team and I help clients secure 0% business funding every day. It's the cheapest lending available on the market. And when we help people secure it, my team always reminds people to set up auto pay on your main checking account where all the money flows into. But unfortunately, we still get 1 or 2 clients every single month who let us know they forgot to set up auto pay and they got a late payment on their new 0% business card. And the problem is, a lot of them in the terms and disclosure states, they could take away your 0% if you are late. Right? So like we say in the Marines, complacency kills, guys. Be ready so you don't have to get ready. The moment you're approved for a new lending account, set up auto pay for at least a minimum. It takes 2 minutes, right? But it can protect you from years of damage. Now, one overutilized card can impact funding results. We tell our clients all the time that banks like to see utilization of 30% or below. Well, many people think that means overall utilization, and it actually can mean each individual card, right? Let me explain. We had a client who had 100% utilization on one of her cards, but the other 3 had low utilization, and she told us she was previously denied, and the reason cited one overutilized card. So we did a balance transfer to spread that debt across multiple cards and get all of them below 30% without having to pay a dime. And her score jumped 30 points in 30 days. Sometimes the fastest way to boost your score isn't getting new cards or limits, but just moving things around. We get clients with thin credit profiles all the time. People who have 2 or 1 or even no credit cards at all. These people always tell us they were told from their parents that credit is evil and they should never get a credit card. Now they're looking to start a business, buy a business, get an SBA loan, or buy a home, but they can't because of that poor advice their parents gave them. Luckily, there's a fix, and it's called authorized user trade lines. We had a 21-year-old entrepreneur who needed a quick score boost before applying for business funding as he had a thin credit profile. And we added him as an authorized user on his dad's 15-year-old credit card with perfect payment history. He never swiped the card once, but his score jumped 80 points the next billing cycle. So the lesson here is simple. Authorized user accounts can shortcut years of credit building, but it only works if the account is spotless. Next, 760 is the magic number. I see people chasing that perfect 850 score, thinking it unlocks hidden perks. But the truth is, at 760 and above, you've already unlocked top tier rates and approvals. That extra 90 points doesn't change the offers you get, right? It's just bragging rights at that point. So stop chasing perfection, hit that 760, and focus on leveraging that score into funding that grows your business. If you're not at that 760 score mark yet, let our team know. I have a link in the description where you can work with us one-on-one, and my team will not only help you build up to a 760, but will help you leverage it to acquire 100K at 0% and create cash flow. Utilization can kill even with a great score. One entrepreneur had a 730 score, which is a pretty decent score, but they were getting denied everywhere because every personal card was maxed out for expenses in his business. Lenders cared more about his risk profile than the 3-digit number. He was able to actually secure a $30K personal loan to pay off all of his balances and jumped his score all the way to 805 in one billing cycle, which enabled him to get approved for 0% business funding to transfer over his debt and save tons of money on interest. So guys, keep your personal utilization as low as possible. Don't even apply for 0% personal cards unless you really need to. Don't use them even if you do get them, because you want to have the best shot at approvals and stay under 9% personal utilization before applying and leverage business credit instead. Guys, your oldest account is a crown jewel. I had a friend of mine, Jonathan. He had some great success in business and became a millionaire, and one of his buddies told him to pay off his student loans, which are about $28,000. You know what happened next? His scores dropped from 750 all the way down to 600. So he hit me up and he was like, dude, what happened? Well, I took a look at his report and come to find out he only had 2 accounts, a 1-year Discover card and a 20-year student loan. And when he took his buddy's advice and paid off that student loan, the account closed, right? When you pay it off. And his oldest credit account, that was the student loan. So his credit age plummeted from an average of 10 years all the way down to 1 year. It's like we say in the Marine Corps, good initiative, but bad judgment. You have to do your research and you have to find out what are the pros and the cons of any major action you take on your credit. So the lesson here, never close your oldest account, guys, unless it's absolutely necessary. If fees are the issue, downgrade to a no-fee version of that same card instead. You know, a $1 error can cost you 40 points on your credit. There was even a Consumer Reports 2021 investigation that found that roughly 34% of people had at least one error on their credit reports, including incorrect personal info, accounts that don't belong to you, or wrongly reported late pays. I've reviewed over 1,000 credit reports for our clients, and I find these little $1 misreported credit limits on a client's card all the time. And what that tiny error does is max out their utilization into a higher risk tier and could drop your score 20 to 100 points, thus killing your chances at getting funded. So be sure to review all 3 bureaus monthly basis and dispute those errors in a timely manner. Otherwise, when that big opportunity strikes, you won't be ready. Small errors can have big impacts, guys. Guys, you got to know what scoring model the lender's using. This is a rookie mistake I see all the time. Clients check their score, they see 700 plus, they get excited, they think they're going to get, approved, only to find out the lender pulls a different scoring model like Vantage. And the scoring can be a way different. It places weight on different factors and you end up getting denied. So always check which scoring model your lender uses before applying and pull that score report to see what your true approval odds are. Debt to income ratios matter more than you think. I've seen 7-figure entrepreneurs get denied for their debt to income ratio being too high. Income doesn't offset risk if the debt load is way too heavy. So take a look at your credit report. There's a section that says payments. This is all of your monthly debt payments that you make on all of your accounts on your credit report. Your mortgage, your auto loan, your credit cards, personal loan, student loan. If it's on your report and has a payment tied to it, it's calculated in your monthly debt payments. So let's say your monthly debt payments are $1,000, but your income is $4,000. 1,000 out of 4K is 25%. Your DTI is 25%. Guys, you want to keep your DTI below 40% to remain attractive to lenders and have a fighting chance at a new loan approval. When I was 18, I hit the ground running on my credit and opened over 10 credit cards in my first 2 years because I had read a handful of books on credit and I knew that credit age factored your average age. And a big mistake people make all the time is they only open one account, years pass by, and now when you finally open that second account, your average age drops in half and your scores plummet. So build out your credit profile early to set up the foundation, and you'll build a strong average age that won't fold each time you open a new account. So the lesson here is simple. Opening multiple accounts early on will temporarily drop your scores, but it's an investment in your future credit score. So your new credit won't tank your scores later down the road. Did you know some business approvals keep business credit on your personal reports? My team and I, we underwrite credit reports all day long, about 20 new reports every day. And every so often, we see business line under account type on a personal credit report, meaning their business card is reporting to their personal credit. This happens mainly with Discover, Capital One, and TD Bank. While it's not a problem if you keep the utilization low on the card, that's typically not the case for most business owners. That capital is the lifeblood of their business and they need it for their day-to-day operations. So stay away from lenders that report business credit to personal or it could affect your scores and your approval odds. Listen, low personal scores doesn't mean no funding. We had a lady, a really nice lady, she had a 650 personal score and she still got over 40K in business funding from BMO Harris after being denied from a ton of other banks and even racking up 20 plus hard inquiries on her TransUnion bureau. Thanks to a clean business credit profile, she built out her business credit scores and had proper structure and a strong relationship at the bank. So personal credit matters, but business credit can still open big doors too, guys. Here's a rule of thumb. Always avoid daily or weekly repayment loans. If it looks like shit, smells like shit, it's probably shit. If you ever see daily payments or weekly or even bi-weekly, look the other way, guys. I've seen healthy businesses collapse underneath the weight of daily repayment loans, also known as merchant cash advances. Even when your revenue dips temporarily, the debt never stops calling. So only take a short-term loan if it's your absolute last option. Guys, you need to use 0% intro offers to fund your growth. When I first read that Robert Kiyosaki, the author of Rich Dad, Poor Dad, bought his first rental property with a credit card, it blew my mind. And back then, they didn't even have the 0% offers that we have today. I've personally funded marketing campaigns and over a dozen different cash flowing investments like crypto mining, trading softwares, and Section 8 real estate, fix and flips, all with 0% APR cards for 12 to 24 months, and so have hundreds of my clients, giving their business time to generate an ROI before the repayment started. Interest-free periods can be a launch pad if you use them strategically. And again, if you guys are looking for up to $250,000 or more in 0% funding to start or scale a business or invest for passive income, click the link in the description and the pinned comment and let's talk. Your last 90 days in credit can make you or break you. Now, here's something a lot of people don't know. Credit card issuers like Amex, Chase, Discover, etc., they often run periodic account reviews and soft inquiries on existing customers. And what they're checking for is risk signals like rising balances, new credit accounts, late pays, or a drop in your credit score. And they use this info to make decisions like cutting your credit limit or even closing your account account preemptively denying you for new credit, all kinds of things, guys. And they can even adjust your internal risk score, right? So remember, you have an internal credit score with your present lender relationships, whether it's Navy Fed or Amex, and keep your profile spotless in the months before doing any major applications with those same institutions, or you could get denied from a soft pull in the past 90 days. Guys, goodwill letters are so underrated and they still work. Late payments are one of the hardest negative items to get removed. You want to know why? Well, the lender has undeniable evidence of when your electronic payment finally hit in their system, which proves you were late. The big mistake people make is trying to dispute late pays before seeking goodwill. I have 4 or 5 goodwill videos on this channel, and people have seen even 5 or even 8 late payments removed from their credit report, like on my Capital One video. It's like the old saying goes, before you wage war, exhaust every path to peace. Before you dispute, guys, try goodwill. Guys, evidence wins disputes. And on the topic of goodwill, I once had a mortgage late payment where my lender's website clearly showed I had auto pay set on, but it didn't draft. I documented all the evidence, and I even made a Loom video screen sharing showing all the proof, and I presented my case like the lawyer in the movie My Cousin Vinny, and I emailed it over to the CEO. And just 3 hours later, his assistant called me, she apologized and said the late payment would be removed in 72 hours. When we dispute with highlighted reports, account statements, and supporting documents and evidence, and items get removed way faster. So guys, always back your disputes with proof. And if you're not using the 30-day dispute clock, what are you doing? Did you know that bureaus have 30 days to verify or remove a disputed item? And if you send your letters via certified mail, you now have proof of whether or not they met that deadline. Problem is, many people never take advantage of this legal deadline. So send disputes via certified mail and time your disputes and follow up exactly on the 30-day mark with the no response letter. Don't wait forever or for the perfect timing. Occasionally, a smoking hot no-doc lender comes across my desk, and just like recently with that $250K no-doc B-lock, for example, and over the years, I've watched clients wait for their score to hit this arbitrary target, right? Like going from 740 to 780, only to miss the lender window when approvals were flowing with no docs, and now that lender tightened up and requires full docs. So it's like Jim Rohn says, strike when the idea is hot and the emotions are high. Don't wait around too long or that opportunity might dry up. I can't stress this enough, guys. Your banking relationships are worth real dollars. I had a client who was denied for a $75K business line of credit through a major bank's online portal. Well, we then instructed him to walk into the branch, sit down with a banker who knew him personally, and left with a $100K approval instead. The only difference here was the relationship. So don't be just another account number. Our best clients that get $400,000 or $500,000 in funding, they walk into the branch, they shake hands and attend branch events and get to know their bankers. Let the decision makers know your face and your business and your story. Banks lend to people, not just credit profiles. Business credit isn't just for big corporations, contrary to popular belief. We had a client, Mike Chang. He just started a brand new LLC, and just 2 weeks later, he got a $60K 0% card from Chase and a few other approvals. That was on a 1-week LLC, guys, with no employees, and he got approved for 6 figures in 0% business funding because his structure was correct and his credit foundation was solid. So just know that you don't have to wait until your business is a bigger business with employees or time or revenue to build business credit. Start now and you'll grow into your approvals. Did you know you can match business credit card limits with statements? A lot of people don't know that you can actually leverage old business credit cards. For example, we had a client, Shannon, from Arizona. She had a $50K Chase card and the 0% ran out on it. We applied with our business relationship manager at US Bank and she was approved for $20K. Well, she submitted her credit card statements from her $50K Chase card and US Bank matched and increased her limit to $50,000. Guys, everything is negotiable. A lot of banks are willing to match your limits on other business cards you might have. Now, speaking of old cards where the 0% runs out, most major banks like Chase, US Bank, Amex, and Bank of America allow you to combine and transfer limits between businesses or business cards. We had a client, Chana. We got her over 400 grand in funding. She originally came to us with 120K and maxed out Chase, Bank of America, and Amex cards. And I came up with a very unique solution. Golden nugget alert. We got her 120K low interest MCA with a prepayment discount and a 60K BLOC from a bank that she had a relationship with. And she used it as a bridge loan to temporarily pay off all of her cards and reset her 0%, right? So she paid off all her cards. She applied for a second B of A, got approved for 38K. Second Amex got approved for 40K. Second Chase got approved for 30K. And she transferred and combined her limits and reset her 0% and got over 135K from Amex and over 105K from B of A. So the lesson here is when you learn how to play the credit game, you can reset 0% for years to come. Did you know you can build business credit in under 30 days? Now, part of the reason she was also approved for that BLOC was because she built her business credit with us. Any of our clients who are 2 years or more in business and looking for BLOCs or SBA lending, we have them establish 3 business trade lines in minutes, whereas a lot of people and gurus will tell you to buy a $10,000 business scam trade line online or set you up with waste of time net 30 vendors. We show our clients how to build business credit in minutes with Nav Prime, and eCredible for under $50. So if you're looking for advanced business credit products like SBA or BLOCs, build business credit with Nav and eCredible. Did you know that too many hard inquiries will choke your approvals? Speaking of BLOCs and business credit cards, you can really stack both when you know which banks pull what bureau. But if you set up a credit monitoring service like IdentityIQ, you don't even have to know what bureau, right? You'll get real-time alerts of which bureau is being pulled by each lender, and then you could strategically stack 2 to 4 approvals per bureau from there. I've seen clients shot down across the board because they let multiple brokers shotgun their applications to dozens of lenders in the wrong order because they were flying blind without credit monitoring service. Link for IdentityIQ is in the description and the pinned comment, guys. So be strategic. Each inquiry counts, and clustering too many accounts at once can tank your approval chances, guys. Always have a funding sprint plan. We batch all funding applications for clients into a short time frame so the inquiries and approvals hit together, and this maximizes leverage before your scores update. So be sure to stay away from random applications and taking too many months to submit them. Move fast, apply strategically, and strike while your profile is at its best. If you want to work with my team one-on-one to build out your exact 0% stack and introduce you to our bankers for higher approvals, the link is in the description and the pinned comment where you could apply to see if you qualify. On to the next lesson, guys. High limit personal cards can actually be leverage tools. One of our clients, Jesse from Missouri, had a 10K personal Amex card. We had him call in 90 days and do a soft pull triple credit line increase, which got him to a 30K limit with a soft pull. And from there, we applied for an Amex business card. Well, he was only approved for 10K. But Amex is one of the only lenders that lets you transfer personal limits to your business limits. So we took 28K off of his 30K personal card and put it on his new business card, making it 38K at 0%. So high limit cards aren't just for spending, they're chess pieces in your funding strategy, guys. Let's talk about comparable credit limits. These can lead to more funding. And on another note, many banks look at these, right? My uncle even had an 800 FICO, applied for Chase, and only got approved for 5K on his business card. He rang up my phone and he was pissed off. He's like, why the heck did they only give me 5K? And I asked him, what's your highest personal card? And his highest personal card was Lowe's for 5K. So Chase matched that. If you've never demonstrated you can handle a high limit, many banks won't approve you for large business limits. So he actually soft pull credit line increased his Lowe's card all the way up to $30,000. I was able to get approved for 50K on his second Chase business application. So the lesson here is simple. Achieve at least one high limit personal card for comparable credit limits so you could get approved for more high limit business funding. Did you know your business address and phone number matter? Well, now you do. We've had so many clients over the years that were told to buy a business address like Opus or Regis or another virtual address and get a 1-800 number to look legit. And this actually backfired on them. It's a red flag for a lot of banks, right? Because many other businesses share that same virtual address. So keep it simple, silly, KISS. Use a local area code, a cell phone number, and a personal home address. Unless you have a brick and mortar of your own, home address is fine, phone number is fine. It all matches the online databases and even matches your driver's license, which makes KYC easier. Lesson here is simple. Sometimes less is more. Don't overthink, just execute. The next lesson is a personal round of funding can work too. We get clients all the time with a thin credit profile who aren't eligible for business funding. They don't have the minimum requirement of 2 primary trade lines with 2 years of age. So what do? We recommend a personal round of funding. Do a personal 0% credit card stack, and here's why. Think about it. You're at a standstill on getting any new loan approvals because your profile is thin, right? And so we like to do a personal 0% stack and establish key relationships like Chase, Amex, Bank of America, Wells Fargo, and US Bank and get 50K plus at 0%. We tell clients if you don't even plan on applying for a car or a home in the next year or two, you might as well use that funding now because you're locked out of any new funding for the next year or two because you applied for so many recent accounts, right? So go ahead, chase your dream or your venture. Just be smart about using that 0% personal funding. The best time to plant a tree was 20 years ago, and the next best time is now. So get started on building your credit profile today. Speaking of personal funding can actually enhance your business funding approval. One great strategy we use internally is securing a $15,000 to $50,000 personal loan before doing a business credit stack. And that's because we use those funds to season and deposit into business checking accounts on all of the lenders in our sequence. And these 5-figure deposits influence not only approval odds, but the limits our clients are getting approved for. So get your hands on some low-hanging fruit, liquid capital, and deposit that to warm up the banks before you apply with them. Did you know you can stack credit without killing your personal scores? A question we get asked all the time is, don't we still get hard inquiries on our personal credit from these business credit applications? And the answer is yes. You are personally guaranteeing these lines and they are going to give you a hard inquiry. But because they don't show on your personal report, our team can remove these hard inquiries for you after your round of funding. So the lesson here is simple. Business credit inquiries can be removed from your personal report so you can keep your personal scores high and your credit clean and continue to fund your dreams. Direct deposit relationships matter, guys. Whenever we're working with a client looking for a debt consolidation loan, we find out what bank that they specifically put their direct deposit into from their W-2 or their income. And this bank, they see your income coming in consistently every single month. And sometimes they're more likely to lend to you even without the need for any proof of income or financial documentation. We like to use these lenders for personal loans to act as bridge loans to consolidate credit card debt, which boosts your score and bridges our clients into business funding. So make sure that the bank that you are directly depositing your income into each month is a generous one that's worth depositing those funds into, and if not, move on to one that is. Speaking of relationships, do not burn bridges with banks, guys. We process dozens of clients every single week, and every now and then, our banker calls us back and say, this client has a past charge-off with this bank like Chase from 15 years ago, and so we can't extend them any funding. Even if it's over 7 years and it's not showing on your report, you are blacklisted with that bank. Certain banks like Chase and Amex, they're extremely valuable for their 0% programs, their travel rewards. And if you burn them or charge off their account, even if you remove it with repair, you might not ever be able to borrow from their ecosystem again. And so a lot of our clients are willing to pay upwards of $10,000 or more to settle those accounts and get back on the good side with these valuable lenders. So even if things go bad, guys, exit gracefully. You never know when you're going to want that door to open again. Guys, with my company, Freedom Funders, we have trusted lenders and business relationship managers that work with our clients to get them more funding than you can normally get on your own. If that's something you're interested in, click the link in the description and the pinned comment and let's talk. Now, guys, bigger credit limits come from asking. One of my team members, Jana, she got approved for just $3,000 from US Bank. She went back to the business relationship manager and she petitioned for a $25K limit. She cited that her relationship with them was a few months old. She had deposits going into the checking. Her business needs were $25,000 as well for her marketing campaign. And he put in for a review and got her increased all the way to $25,000. So the lesson here is simple. Issuers often won't raise your limits unless you ask and have a track record to back it up. Here's a golden nugget, guys. Did you know you can backdate entity age via a DBA, a doing business as? This is one of the golden nuggets, guys. If you watch any of my videos, you know how important it is to have a 2-year entity when you're going for a BLOC. Well, did you know you can backdate age on a DBA? When you file for a DBA certificate, it'll ask you how long you've been operating under that trade name. For example, we get clients all the time that have been in business for years, running a food truck, doing tattoos, or being a barber, but they haven't gotten their legit LLC yet, and they just made their LLC. Well, by getting a DBA, they're now able to backdate their age and get all the credit for the time they were doing business, and they're able to access BLOCs and age requirement lending products. In fact, we even recently got access to a new loan product, a $250K no-doc BLOC. So if you have years of experience in your business, but only recently formally incorporated, you can get credit for that age via filing a DBA and backdating it. Business lines of credit are more flexible than business loans. A BLOC is one of the hottest lending products out there right now. It's like if a loan and a credit card had a baby. It has the liquidity of a term loan, right? You can access that cash in your account whenever you want. You could wire it, ACH it, you could withdraw it, but it has the flexibility of a credit card because once you pay it down, you could use it again and again, unlike a term loan, right? Those things are just one and done. We had a client who took out a $100K term loan and she regretted it because she didn't need all that cash up front. She overestimated her business needs and turned out she only needed $30K, but with a loan, they hit you with the entire amount entirely at the front end, and you're gonna pay interest no matter if you use only a portion of that loan or none of that loan. If she would have had a BLOC, she could have just withdrew what she needed and paid for what she withdrew. So guys, match the product to the purpose. Lines are for flexibility and loans are for one-time big needs. Guys, you got to protect your personal credit like an asset. I've had entrepreneurs treat credit casually, carrying balances from month to month, getting those dumb store cards for 10% off, and getting hit with hard inquiries. Then last minute, a funding opportunity appears, and now all of a sudden they care, but it's too late. They now realize they couldn't qualify because of very avoidable dings that they had on their credit. You got to garden your personal credit all the time. Pick out the weeds, water the plants, and maintain a clean, squared away, and organized garden that's ready for harvesting time when those opportunities come by. So guys, your credit is an income generating asset. Treat it like one. And the final lesson, guys, funding is just the start. I've helped people secure massive amounts of funding, only to watch them blow it on unplanned expenses and struggle with repayments or put it into sinking ships, like businesses that are drowning and no longer profitable. I see it all the time with trucking businesses, tow truck companies, or even moving companies. Don't wait till your business is sinking to get funding. Don't use it to hold you over hard times. Be proactive and get funding to create cash flow and invest while your business is on the up and up. The clients who win long term have a plan for every dollar before it ever even hits their account. So the lesson here is getting the money is one step, but the far more important step is step number 2, and that's using that money to grow. Always have a strategy for ROI before the funds arrive. At the end of the day, the goal isn't just to get credit or funding, it's to use it as a tool to buy your time, freedom, and growth. If that's something you want me and my team to help you with, there are links in the description. We can help you secure 100K plus at 0% capital and deploy that capital to earn cash flow. If you have credit cards that you need to turn into cash, be sure to watch this video on how to liquidate your credit cards into cash. As always, guys, links for credit repair and business funding are in the pinned comment in the description. If you found value, be sure to like and subscribe. This is Credit with Colin, and I'll see you guys on the next one.